Perfect. So thank you for patience. Uh, Now I suppose you see my screen. Just a moment.
Yeah, we can see it.
Yeah, was late. Mm-hmm. So also I have to turn on recording. So welcome you all, guys. How many are we? Or more than 30 people? Good. So first of all, before we started, you may ask any questions you want, but maybe it's more wise to ask them after our meeting because maybe I will clarify everything you would like to know. If I miss something, then you may ask for sure. Also, you're welcome to interrupt me any moment. So don't wait until like something, yeah. You see my screen. What actually we should do today? I wanted somehow to summarize the last topic because it's very important for your midterm. We have maybe a few words about the structure. I don't have slides, unfortunately. I will I will try to discuss it briefly verbally. So we're gonna have it lasts 80 minutes, 80 or maybe 75. We will see. You're gonna have 10 or 12 multiple choice questions. First of all, we do this in Smart LMS. So we just log in from we need laptop or some gadget. You can also, yeah, to do calculations, maybe it's good to have a laptop with Excel, but I suppose calculations are not as difficult, so you may use just calculators. So gadget is required, internet connection also. You just log in into Smart LMS, and around we have it at 11:10, right? So around I think we gather 5 minutes before. I propose some instructions and we start exactly 11:10. So 11:10, your smart LMS, the test will be opened. You may just um, start it. And the thing is that we have multiple choice, restricted in time. So it's going to be around 20 minutes, I suppose, for all questions. And after 20 minutes are gone, we all finish multiple choice, and then we proceed with the rest of the exam. And after that, we have two parts. First part is comprised of three mini cases, just a small like one paragraph of description and one or two questions just to clarify the situation and propose your opinion. So I will clarify later about the details and I will show you examples from last year's. I'm not sure that they're gonna be similar in many cases, but idea will be pretty the same. Yeah, I mean the idea how to answer in the best way to deliver like comprehensively what what instructors would like to hear. So these three tasks, they actually so about the points, we will see, okay, how to distribute them more in favorable way for the students. Anyway, after we finished with the three mini cases, we have calculations task, one problem related to more likely dividends decisions, but in general, it can be related just to, in general, to the topic of shareholders value. So Um, I mean, if you would like to understand the amount of dividends, first of all, maybe you gonna be asked about valuing their the offering for you, and then you can using this calculate something else uh, like dividends and some maybe other important things. We will see, because right now we have just a pattern of their task, and we're going to discuss it, I suppose, tomorrow with Maria, and I will let you know on the consultation which we have Tuesday, I suppose, yeah, Tuesday evening. So by this moment, we know for sure that calculations of free cash flows and calculations of dividends will be for sure required, but we will see exactly how we're going to transform this thing. I mean, in the contrast to last year's problem, which we're gonna solve right now, actually. Yeah, so in general, it is like this. Again, three parts, multiple choice 20 minutes, then the rest 60 minutes, about three mini cases and one problem. So not really difficult, because actually we expect just one paragraph of for the answer, just one small paragraph, like five maybe sentences, five, six sentences, but delivering the exact answer which is asked for. Uh, anyway, I will show you examples of last year's answers, which were graded like 8, 9, 9, 10, 6, 7, so to understand the difference.
May I ask one question, please?
Yeah, sure, sure.
So the midterm will be before the lecture or during the lecture?
Um, during the lecture, so we
Okay.
spend the lecture for midterm. And
Oh,
the thing is that actually we do this on the lecture of economist cohort, because managers have, yeah, so one cohort will have a window, how to say, в общем, окно будет у вас после, у менеджеров получается, потому что у вас нет пар до, получается, скольки там, 14 получается, да, 20. 40. Ну, в общем, пишем все в одно время, просто вот, к сожалению, потоку менеджеров придется потом иметь как бы свободное, в общем, свободное окно.
не, у нас
Или...
потом есть пара. Мне просто
А,
показалось, что сказали, что в 11:10 midterm, а у нас лекция в час.
у вас лекция с нами в час, а в 11:10 у вас есть пары?
Ну, у меня не стоит, может, у другого стоит.
Ну вот значит, что вы же на менеджменте учитесь, правильно, не на экономике?
Ну да, а здесь есть эконом люди?
Мне кажется, что здесь есть все.
Окей.
А, Вот, да, то есть получается, что значит, да, вы должны будете прийти к 11:10. Да, вы будете, все пишут в 11:10, вы правильно поняли. Значит, у вас будет как раз окно потом, потому что
Мгм.
а,
Мгм.
а, это, как сказать, короче, у вас переносится наша лекция на 11:10, типа того. Вот, мне надо
Окей, это
завтра
важное
это, наверное,
уточнение,
сделать.
спасибо.
Вот, да. Ну, в
Извините,
общем, все начинаем в 11:10 для всех. Это любого касается студента. Вот, если что, такое уточнение. So, can I continue? Yeah, if you don't have questions. So, um, idea was where I stopped actually before I was interrupted. So that we gonna solve today last year midterm, and so what was my idea actually?
Кстати,
Maybe
ответы
we.
на
Hmm?
кейсы, которые получили 9:10. Ну, по крайней мере, вроде на этом закончили.
Да, собственно, yeah, actually, uh, I have examples of good and moderate answers for last year's midterm questions, and we actually gonna solve it today all together. But before that moment, I would like to discuss some key issues from last topic, and I have some questions. To you, like how maybe just to check, did you get me right before while we were discussing some evaluation issues, We did this on lectures, I suppose. We discussed the problem when actually the shareholder should be offered some stake in the company, and to offer him stake, we have to make valuation of the project. Maybe it's going to be rough and not so accurate, but still it's like something we understand the logic how it works, and to to make it accurate, we just should improve our model by more assumptions, and like to get really accurate values of all factors. But in our case, we don't need real numbers. Yeah. So I mean, if we make valuation in our tasks, despite it's simplified in terms of like the number of input parameters and simplicity in some logic, but still it works. Yeah. So real life problems, they require just more time to clarify numbers accurately. That's the only difference. Okay. So, and that's why I would like to start with the issue of cash flows. We discussed it several times. So, last time, I suppose we finished with the idea that to understand which project is valuable, we have to make some valuation for it to understand how much it can add value to shareholders who invests. And here, the issue of cash flow is like central. Yeah. So actually, managers manage cash, company uses cash as a liquid asset, and it funds our operating capital, and some things are going. And finally, being, for instance, from manager standpoint, we should understand how to calculate this cash flow, and how much we can invest, how much we can pay out to shareholders. Like, so really relevant problem. So, and my question in this way is, could someone tell me the difference between maybe free cash flow and free cash flow to their equity? And so which one actually should we use while we talking, for instance, about increasing shareholders' wealth or some cash which comes to the company? So how to make the difference? Because it's important. Despite there are sometimes slight differences, still it's important to consider like we how to define one and another. Who wants to share the opinion? Like maybe just start and I can help, of course. So guys, I can actually interrupt recording if you are shy, but I suppose like at least one of you knows something, yeah, something, maybe very generalized, but something.
Maybe I can tell then.
Yeah, thank you very much.
Okay, so I can not remember all the questions you've said recently, but some words. As I understand, for us is more important to know free cash flow to equity because it is
Process for whom?
in calculations about the dividends payout, and when we
I'm sorry, but
and also
I
when
mean,
we
usually there are two sides in our um, subject, are managers, shareholders, and of course there are other stakeholders, but usually when we're talking about like investing and paying back our investments, we discuss from standpoint of managers who actually provide returns for shareholders. So because they manage money. So it means if you use if you want to say something is important, you should clarify for whom. Yeah, because sometimes they have
Oh,
opposite opinion.
yes.
Mm-hmm.
So when we make a decision about the dividend payout, it is more as a CFO, for example, it will be more important for us to know free cash flow to equity, as I understood, because that is the measure of money left after uh, interest payments and other uh, non-equity issues. I
Equity
don't know,
issues, you mean dividends? Dividends and
non-equity.
non-equity. Okay. Yeah.
Yes.
Actually, you are right. But free cash flow to equity, it's like free cash flow which goes to the equity of the company, like its treasury. Yeah, the thing which belongs to shareholders, and so it means that if it belongs to shareholders, they can use it how they want to uh, pay out in the in terms in how to say by means of dividends of different kinds actually, or maybe do buybacks. Yeah, buy some shares back to increase their value of each one. And yeah, it's very important, but for shareholders. And but still, if we're talking about CFO, I suppose CFO is interested of any kind of cash flow because he has to track how cash inflows to the company and what are outflows because we have to pay for debt providers, for shareholders, and also we have to pay taxes, we have to pay for suppliers, and we have to get money from our customers uh, as soon as possible, decreasing our receivables turnover. And so uh, my opinion is that you're right if you're talking about shareholders view, but if we're talking about CF4, so I suppose all are important for him. And maybe someone knows the difference because I suppose I provided you with a really good video in the chat. I can't believe that no one watched
Uh,
it. So
can
let
I
me.
try?
Yeah, yeah,
So
yeah.
as far
Yeah,
as
it
I
is.
understood, so the difference is that in just free cash flow, we're talking about both loans and equity we got from our shareholders, and in the case of free cash flow on equity, we're talking only about the equity of shareholders.
Yeah, yeah, exactly. So, and talking about, for instance, free cash flow, what we are talking about. So, what is free cash flow? Because I see here some, different, how to say, terms. EBITDA, cash flow, free cash flow to equity, free cash flow to firm. So, I suppose all of them are cash flows, but they demonstrate different angles, and some of them like include others, and some maybe miss something, and on the contrary have something additional. So, who can clarify, guys?
Clarify what is free cash flow.
Yeah, what is free cash flow and what's the difference with free cash flow to firm, for instance, to equity, and what is in general cash flow? What can we say? Or operating cash flow?
Yeah. As for free cash flow, I suppose that here we mean that it is like cash flow that is left after we deduct all capital expenditures.
Mm-hmm.
And
Mm-hmm.
as for free cash flow to equity, here we also take into account our debt So we need to like sum or deduct our net debt issued or repayment.
Mm-hmm. So in this case, you mean we have to uh, to account for that as well, right?
Yes.
Mm-hmm. So account for that, you means what? You have to include here in free cash flow, for instance, some debt payments. So for instance, if you cover your debt, just like decreasing your long-term liabilities, you mean this?
I think here we need to take into account the difference between debt issued and what we like get if we take a loan as a company.
Mm-hmm. Mm-hmm. But maybe what you're talking about is called free cash flow to equity. Yeah,
Yeah,
because
I'm talking about this. Yeah.
yeah. Oh, yeah. Thank you. Yeah. So here there is a good scheme which shows us actually the difference. Yeah. First of all, there is EBITDA, which it represents the profit, operating profit. In other words, earnings before interest, taxes. And here we don't account for non-cash expenses like depreciation and amortization. So in fact, this is like very close to operating cash flow, because here we don't use we add back non-cash expenses, but only depreciation actually. But in fact, we can have some other, and we don't account for payments to debt providers in for the form of interest, and also we don't account for taxes. So this is before actual taxes, and this amount in our case is this 18,000. And maybe this is a really good number for the firm, but this just, it's not, it doesn't represent the actual amount which we have rest and, for instance, can use for dividend payments. Yeah. So in this case, we should like increase, improve our calculations, but adding more different operating activities here. So not only calculate for operating profit, but also add some changes in our working capital, for instance. So if we do this, yeah, you see the difference. Here we use this amount from where, yeah, actually it's made, mm, we use this amount and add back taxes, interest, depreciation, yeah? So this is our income statement actually. And if we also calculate for changes in working capital, here, for instance, change in our accounts receivable, inventory, accounts payable. So this is actually our net working capital. And then this amount represents our operating cash flow. Here it said just cash flow. So, and this amount represents actually what we have rest because of what? Because we did some um, we did some changes in inventory actually. As I see, we well, it's here 10. Let's calculate. Yeah, I suppose here we don't actually so yeah, exactly. We calculate because here it's change in accounts receivable is positive. It means that actually we decreased our turnover and we have more money. We have to keep less in accounts receivable, and change in accounts payable is negative, so it means we have to spend more money for this. And so actually, yeah, it is like this. And yeah, so and next, when we calculated for not only our operating cash flow, also accounted for change in net working capital, we can add What? Actually, we don't need money only for, we need money not only for working capital, but also for capital expenditures to invest in not current assets like here, but long-term assets, non-current. And that's why we account for our investment sections, like, for instance, um, purchase of PPE. What is PPE? Property, plant, and equipment.
equipment.
Good. And you see here, it's negative. What does it mean for us? It means that we spend money. If it's positive, it means that we decreased our fixed assets and sold something. And yeah, so in this way, you see the difference. Here are just some, operating income. Let's say like this. In this case, also changing net working capital. In this case, we also add um, change in fixed assets, and in other words, capital expenditures, capex. And here we go with free cash flow. This is the answer. So free cash flow is the amount which company earns after and then deducting change in net working capital, deducting change in fixed assets, capital expenditures, in other words, and then we go with free cash flow. And the thing is that in fact, free cash flow to equity differs from free cash flow using just like one thing. Which thing exactly?
Debt? No.
That, of course, because here you see like this color, how to say, blue marine. Um, it's this amount goes from what? Issuance repayment of debt. So it means if it's in brackets negative, it means repayment because that's cash which outflows from the company to the bank. If it's positive, it means that we actually got some new debt, and this debt can be used for everything we require, maybe for capital expenditures, maybe for paying out dividends here. Yeah. So, and that's the thing. And also we have the thing which is called free cash flow to the firm. And who can clarify the difference between this? You see, I suppose we issued new debt like 350. In this case, it should be, if free cash flow to the firm is 5,000, then it's supposed to be 8,500, but it's 50 less. Where 50 came? Why it's disappeared actually? Where is 50 on this picture?
Maybe because we have like 50 interest and we
Yeah,
need to
exactly.
calculate our net debt.
Yeah, and net actually, net means are the if you issue something and pay something back, then then you just account for the difference. That's called usually net. Net it's with the deduction of initial investment or like initial portion. So, but here I suppose idea is that the difference between free cash flow and free cash flow to the firm, you see this just 50. Yeah. The thing is that here to the firm free cash flow we have without 50. Yeah. But this 50 still goes to the firm, and to the firm goes without the interest expense. So that's why 5,000. And actually, we can say that free cash flow to the firm, that's amount which goes um, to the firm before it paid something to debt providers and equity providers. Got the idea? That I would say that it works pretty like this. You calculate free cash flow to the firm, and then some interest goes to some operating cost as interest. It goes to debt providers, and then you have free cash flow. And then if you account for some net debt issuance, you may get free cash flow to the equity. And what can we say is the difference with cash flow and free cash flow? That here we actually invested in some asset, as I see. Yeah, we bought something for 5,000. Yeah, that's why we have actually this difference. Yeah.
May I ask a
So
question
yeah,
about
sure, sure. Waiting for it.
the PC? This is the interest for the bank, if I understood correctly. But actually, I don't see this number in the table. So it
Yeah,
should be
why?
written in the task. I mean,
Yeah, actually, in your task, it will be provided for sure. Yeah, but just maybe to sum up, on one of the seminars, I mentioned that there are three main reporting documents. And these documents, they have how to say explicit and enough information for like making unbiased judgments about financial state of the company. And it means if you want to calculate something, usually these three reports is more than enough. Yeah, I'm not going to give you three reports. Initially, my idea was to give you 10K report, but it's long, and okay, I could provide it one day in advance, so to say, have a look at it. But I decided to simplify and just to make some like not real numbers, and get only which some sections which we require in our calculations. So it means if you will be if you will have a requirement to calculate something, you will have all numbers. Yeah, but somewhere you will have suggestion to make all required assumptions as you need. It means if you need some number, you can say, okay, we don't need this number because maybe like our analysts didn't provide us the full information, but we have to assume something reasonable and keep this in mind. Yeah. So, I mean, if you need something, but it's not given, try to make an assumption. Yeah. So, but I suppose um, I will tell you, like I will clarify in the end of the task. Yeah, do you need to make some assumptions? Um, so yeah,
okay, thank
that's
you.
actually the answer. Yeah, and about three reports actually. So if we're talking about cash flows, then it's a good thing to know how cash flow statement looks like. Here you see we have three breakdowns. Yeah, we discussed it last lecture, I suppose, and before that as well. So the question is actually if um, we see all three sections like operating, investing, and financing, then we have like net result, net change. Yeah, and this net change, it is close to what? To cash flow, free cash flow, or to what? Are your ideas? What are your ideas?
I think it should be close to free cash flow, maybe.
Yeah, actually, so you remember how we calculate all these cash flows? You remember what we do actually? We just
Yes.
yeah, we usually in our calculations in this one, we usually use indirect method, right? So where was it? Here, yeah, we use indirect method. It means we take net income from our income statement, yeah, and then make some adjustments here, and in terms of adding back depreciation, amortization, and other non-cash expenses, subtracting um, net working capital, which is in cash flow statement actually, in cash from operations sections. And then we also deduct capital expenditures, which are here. Yeah, I would say all this amount. So because if we acquire some business, it's also like investment, and we capitalize actually it. Um, so and So, and if we want to say something about debt, about dividends, if we see that company actually paid back some debt, then we use this section, cash from financing. Yeah, it means that to calculate this different free cash flow, we need different sections of cash flow statement, and we need also some values from income statement. So, and also this change in net working capital and as well as capital expenditures, we can actually take from balance sheet, right? Because we can see if we have the data for previous year and for the year before. Oh, I mean for current year and previous year. So we can see the change in the difference between current assets, current liabilities will be change in net working capital, and the change in our fixed assets, non-current assets, I mean. No, usually it's property, plant, and equipment, and some other. So I mean, not all long-term assets we see the change actually. Yeah, we have to like deep into details. But in your task, I suppose you will be given just like maybe two sections, one or two sections. So we're not going to have really large real life balance sheet because it's a little bit long. Yeah. So, but if you require some real data, that's not a problem. We can propose you with with the data but aggregated. So, uh, how would you prefer, guys? Real data or some um, unreal data?
I
I
think
guess
we
that
would
one that
like.
will be shorter
Sure.
because we have limited time.
Yeah, I think as well. Yeah, if you're interested in like real reports, you can do this anyway. Yeah, any day, just input 10K, um, Apple, and that's it. Yeah, and you will be follow to SEC website and can download many different reports. And in 10K, we will use 10K actually for our final exam. Yeah, but for now, let's start from something. Yeah, so I suppose right now we have better understanding what is free cash flow to equity to the firm, and we can try to calculate something. And also, we heard something, maybe which other types of cash flows did you hear before? I suppose you have right now some other finance subjects like valuation. Some of you for sure have, and because I saw your schedule, and also I suppose before that, so you had to hear something else. Which are other types of cash flow did you hear?
Cash flow from operating activities.
Yeah, but in our case, I suppose it is this just cash flow, I suppose, or maybe you mean this one, cash flow from operating activities. So, in other words, all our operating inflows, outflows related to our like current um, change in our current assets and liabilities, and um, maybe you heard about levered and unlevered free cash flow. Have you heard? So, okay, if not, that's okay, that's fine, but I can't believe to be sure because really popular um, term. So, what is unlevered and levered free cash flow? What is actually, maybe you also heard levered and levered beta in CAPM model, no?
No.
So,
Yeah, it was a course,
yeah,
but
yeah. I knew, of course, you should hear about this because levered and unlevered, what it usually means, it's like leveraged and unleveraged, actually. So leverage is something related to debt, right? And that's why unlevered free cash flow, it's free cash flow which is unlevered and goes to the firm. In other words, does it account for um, some debt payments? It's like unleveraged, so without like payments. That's why actually free cash flow to firm, it doesn't account for payments to debt providers, either interest or debt repayment. Yeah. So that's the thing. It's in other words, free cash flow to the firm and unlevered free cash flow. It's the same thing, exactly the same. Just another term, another how to say title. Okay, you good. Another name. So, what else? We also, if it exists unlevered, then levered free cash flow exists for sure, right? And levered, where it's here, could you tell?
It's free cash flow to equity.
Yeah, exactly. It's free cash flow to equity. It's levered because actually we like leveraged our cash flow by like getting something or giving back to our debt provider. So if you cope to deal with them, finally you paid everything you need, and then um, just a moment, I'm just get a call. I have to skip it. Yeah. So after you pay to the debt providers, that the money which goes to shareholders, that's why we have free cash flow to equity, and in other words, can call this lever free cash flow. Yeah. So I suppose finally we are done with this, and we can come to calculations. But before that, maybe. So which videos did I provide to you? What can I? Yeah. Okay. We also had some explanations for div. Yeah, it's not going too good. So we got some explanations about dividend policies. So it works. So we had some explanations about dividends, I suppose, here. So yeah. Um, so right now we understand how cash flow is calculated, but still if we even calculated free cash flow to equity, we have to understand which part should we leave in the company, in other words, to retain, and which to pay out. So that's the issue. How could we answer it? Which factors actually influence on our decision here? Who can help me to explain? Guys. So, okay, I calculated my free cash flow to equity is 1 million, 1 million United States dollars. What to do next? if I want to understand how much to pay for my shareholders, because which factors should I consider? Just
Other
imagine.
investments
Mhm.
in other
Yeah, of course,
projects,
other investments, but
development of the
other,
company.
yeah, of course. Yeah, exactly. So both you are right. And the first opinion was about other investments. And actually, our investments are where? In CapEx. So it means when we calculated free cash flow to equity, we already accounted for some promising investments, which are considered capital expenditures. Yeah. So, but if you feel that something else can be invested in, there are some still opportunities, there are some more opportunities still, you can, of course, try to explain that, okay, we accounted for capex, but we should invest in something else. Okay, and you just deduct it. Okay, and finally, what was the next suggestion about dividend policy, right? So exactly, if you understand the amount which you have after all investments, for instance, it's 500,000, yeah, then you are like, okay, we have 500,000, but uh, we can pay it the whole this amount out because we don't need to keep it in the company. We have enough cash to sustain all our operations and to sustain all investments and for everything we need. So we just if we keep it in there on the balance, then we have um, to to get some gains from it, yeah, to invest maybe in marketable securities, or so it depends on the amount, but we have to keep it in enough liquid asset, but still which provides us with some interest, with some gain, small at least, yeah. So otherwise it doesn't seem efficient. And I mean that um, so can we pay the whole 500,000 out? Yeah, of course we can, but should we do like this? It depends. It depends exactly on our interaction with shareholders. So if there are actually three, so just a moment. Yeah, that's about capex, free cash flow, free cash flow to equity calculations. So maybe this is somewhere complicated because this is from Investopedia. We discussed from Corporate Finance Institute, yeah, but still they should be equal, but sometimes they just use different abbreviations and different titles, slightly different. But so don't be baffled. So idea everywhere is similar, but maybe just small. Yeah, about dividends. And so um, to understand how much to pay we can how much we can pay, we understood, yeah, but how much we should, it depends on our relations with shareholders. And sometimes companies don't pay dividends at all, right? Because if they are in the stage of high development, it's I mean development in high with high acceleration, when the growth of revenues and our market share is significantly increasing from year to year. So in this way, it's not we have to invest in ourselves as much as possible, yeah, because if we win like the larger portion of the market, then it means that the next years we will earn more per year. Um, that's why any investor will say, okay, don't pay dividends, just reinvest. If you reinvest, all other shareholders and investors on the market see it and are like, oh, this company invests in R&D projects like 10% of its revenues. It's really much more than any other competitor in the industry. So we have to invest in it by the shares. And so this creates demands, and so everyone wins. Yeah, capital gains are in this way a good option to like to get some gains. But at the same time, to feel this gain, you have to pay to sell the stock or part of the stock, and it can burdens opportunity cost. So in this case, still most of shareholders, especially those who invest in long term, they want to feel dividends really. And in this way, which options actually do we have? We have the option to pay cash dividend, right? To pay stock dividend just to give more shares. But the problem here can be we don't have shares in our reserve, in our treasury, so we have to issue the new stock, and it can dilute the shares of previous shareholders. So it means that the same capital will be split into more stocks. So because we increased our number of shares outstanding, and but sometimes it still has a good effect in um, in short term. I mean, so if company makes splits, sometimes it feels it is considered it is regarded as a good signal by investors, and sometimes it goes with their increase in share price. But still, it's not. It's companies has to be accurate with this thing. And what are other options? Like we discussed about stock dividends, we discussed about stock split, we discussed cash dividend, and also the rest is what to do. To buy back shares, to reduce the number of shares outstanding. So it's the opposite to the idea of issuing new stock. So yeah, I suppose I didn't tell you about stock split. I told you only about stock dividend. And stock split is when we provide like division of existing shares. And but uh, exactly buybacks and splits will be discussed after midterm. Yes, so to have something rest for the exam. And that's why we can focus on cash dividends. And what in terms of cash dividend? Of course, if we decided that, yeah, we have to pay cash, we have to take it from free cash flow to equity, but we have just 500 thousand, yeah, half a million, I said, of monetary units. Let it be like this. So uh, can it be situation that we have to pay 1 million, but we have just a half? Of course, it can be. If we have uh, stable dividend policy, it means that we have, so maybe we have, yeah, it's here. If we have stable dividend policy, it means that we pay pretty the same dividends. Yeah. If I was given last year 10 rubles per share, this year I want to get 10, at least 10, 12, something like this. Yeah. So, because for me, it's a good idea when I understand that if I own 1% in the company, each year or each quarter I give in some exact amount, like 1 million. Yeah, for me it's good to focus my future inflows, and so it gives me some the feeling of self stability. Yeah, but and that's why it's like the most commonly used strategy. But also exists constant dividend policy, and it tells like, okay, if we earn something, we have to, we should share it, we can share it. We will do this. Yeah, so we get 40%, you get 60% or otherwise. So yeah, we just have to negotiate the payout ratio. Yeah, but the problem here is what? If you don't earn uh, profit, net profit, then we cannot pay something. That thing. And residual dividend policy, what it is? Who can explain? So the residual dividend policy is actually the thing which we discussed when we got some free cash flow to equity. We already accounted for capex for change in NVC, and then we are like, okay, we have some amount of cash, 500,000 residual. So, and in this way, maybe we can pay it out because we don't have their how to say, so we don't have the reason a reason to keep it on our balance in the form of cash, just we can pay it out. And so in this way, um, our shareholders understand that we first of all we meet our operating and non-operating, I mean current and non-current um, financial requirements, we satisfy it. And after that, we pay what is a residual. And in this, if we get this amount, we understand that it really like the maximum amount which company could allow to pay, yeah, in our best interests as well. So, and it means that actually in the task you can be given one of these dividend policies, or you can be said like our company before one moment used to pay stable dividend, used to follow stable dividend policy. But at the same time, you can say like it was before, but right now, according to their information we given for company, it's not wise to follow this policy, and it can just pursue all the opportunities offered on the market. And so I mean, if you have different opinion on the situation, it can be, of course, and sometimes I expect this, yeah, um, try to just to explain. So that's the thing, yeah. um, but also, if you give a residual dividend policy, so you don't need the explanation, you just meet all the opportunities on the market, and then what is the rest you pay. Yeah. So I mean, if you are asked to explain how much dividends to pay, then you are free to say, okay, company used to follow stable dividend policy, so according to this, we have to do this. Yeah, you will have data for this policy and for this as well. So I mean, you have all the data to calculate dividends for each of the strategy. But try to explain. Would you recommend company to change its strategy or just to follow previously used? So, any questions here?
That is clear. I think we can go to the task you've
Yeah,
sent to our
perfect.
Telegram.
Yeah, thank you, thank you. So I suppose something in a folder. Yeah, task is actually, let me check. This is, yeah, this is, which files do we have here? We have mock midterm. What is mock? It's like training, test, midterm. Yeah, mock, this word is used in English-speaking country, in United Kingdom, I suppose. Um, so it's just mock midterm, which was given for students last year, but we've discussed that we will have a little bit different structure, and also here there are no multiple choice questions. We used them it only for final exam, but this year we have. So here there are some tasks I would recommend you to read it. And also, after our consultation, I will provide you the file with my solutions and explanations, and also the file with the examples of highly and moderately graded answers. So, I mean, you could have a look at home at it, and then formulate your questions. And on the next meeting, you will be welcome to ask. Yeah. Um, and by the way, by next meeting, I will possess more information about like exact tasks. So I will try to focus you somehow. Yeah, that's actually about shareholders' activism. We did not discuss it in the way I wanted. That's why we left it for the second module, because we little bit changed the path which we follow comparison to previous year, because we slightly changed the agenda of the second module to focus on more interesting issues as I see it. So, I mean, we eliminated some boring stuff from the agenda. So yeah, and finally, we have here the task. It's I suppose it's the same which I shared in the um, revenues. Yeah, but here we have to. Yeah, I suppose it's pretty the same, but with a small difference. So let's follow this. Yeah, I can just delete it from the chat. So yeah, have a look. It's this document is in the folder. I will duplicate it in 5 sec in our chat. So what's actually the question? I would suggest you, when you have a task, yeah, always try to start with the question. So if you don't understand it, then you will understand it later. But still try to understand the question before you actually read the task, because it will save you time actually. Guys, are you here?
Yes.
Yes, we're here.
Good. So I will use Excel. Yeah. Nothing more. Yeah, we don't need the last one. The last task actually will be left for an exam, because an exam we will have similar task, but more real life. Yeah, it was more clarifications regarding some aspects of companies' governance system, and so just like we actually, this is a basic task to allow us to have more realistic task later for on the exam. So what first of all, what is your strategy? First step in the strategy I suggested to start from the question, and question is about uh, dividend payments, and what is the role CF4. What announcement regarding dividend payments would you suggest if you were to make before the declaration date? Um, Declaration date, it's the term which reflects the date when company declares dividend. Declares, it means it announces it and says the dividend will be like this. Yeah. After this, they have a liability to pay it in this amount which they stated before. But before declaration date, they don't have obligations.
Okay,
So
what is the next step?
that's my question to you. I would like you to share your strategy. So I suppose you have some experience of solving problems.
Yes, but not like this. But if I would solve it, I have some ideas. For now, I know that I would answer the question regarding dividend payments. So I should know the dividend policy in the company. And we see that it is constant dividend policy. So the payment will be the same, but it will be the percentage, as I understand that. So we should calculate the free cash flow to equity. Then we can then maybe we can calculate payout ratio and free cash flow for the this
Mhm.
year, and then we can calculate the amount of money according to the payout ratio. Something like that.
Yeah, yeah, I completely agree. So first of all, we see that dividend policy is constant. So constant, it means we have to keep constant payout. Just to say, guys, we share like 30-70 or uh, just a moment, кажется, пожарная эвакуация. Just a moment. So, guys, I have to stop because we are told like чрезвычайная ситуация, всем покинуть здание. I hope everything is okay. So I'll be back in like 5 minutes maybe, or I take laptop with me. So, but I want to clarify before is something dangerous here. Okay.
Да,
Okay,
спасибо.
yes, okay.